Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks, finance, and global markets. I'm your host, Louie, and I'm excited to have you join us today. We're living in interesting times, folks. The global economy is navigating through a complex web of trade tensions, geopolitical uncertainty, and shifting market dynamics. As investors, it's essential to stay informed and adapt to these changes to make informed decisions. Today, we're going to explore the ongoing trade saga between the U.S. and its trading partners. President Donald Trump has been making headlines with his tariff announcements, leaving markets wondering what's next. Our guest expert, Jeff Dennis, shared his insights on the Economic Times, and will be discussing his views on the potential impact of these tariffs on the global economy. According to GF, the markets have gotten used to these deadline pushes, but if the tariffs are actually imposed, it could lead to volatile markets. He believes that the U.S. labor market is beginning to soften, which could support a couple of interest rate cuts. In fact, he predicts 2 rate cuts, one in September and another in the fourth quarter. Now, it's essential to consider multiple perspectives on this issue. While some experts argue that the tariffs will have a negligible impact on the U.S. economy, others warn that they could lead to a significant slowdown. As investors, it's crucial too. I'm having trouble processing that. Could you try again? Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investment. I'm your host, Louis, and I'm excited to share today's stories with you. We're starting off with a look at 2 companies that have been making headlines in the market. First up, Meta is facing another lawsuit, this time over its handling of user data. The company has faced numerous lawsuits and fines in recent years, and this latest case could potentially lead to even more financial penalties. We'll be keeping an eye on this story as it develops. In other news, Suzlon Energy has been getting attention from investors after the company reported a significant increase in revenue and net profit for the fiscal year 2025. The company's order book is at a record high, with 5.6 GW of orders, which provides robust revenue visibility for the coming years. Brokerage firms such as Anand Rathi have initiated coverage with a buy rating, citing the company's strong financial health and growth prospects. On the technical side, Suzlon Energy's stock has been trading above its 50-day and 200-day simple moving averages, which could be a bullish sign for investors. However, it's essential to remember that past performance is not always indicative of future results, and there are risks involved with any investment. It's also worth noting that the renewable energy sector as a whole has been gaining traction in recent years, driven by government initiatives and increasing demand for clean energy. As India aims to achieve its target of 500 GW of renewable energy capacity by 2030, companies like Suzlon Energy could potentially benefit from this trend. We'll be discussing more about the prospects and challenges facing Suzlon Energy and other companies in the renewable energy sector throughout this episode. Our goal is to provide you with a balanced view of the market, highlighting both the opportunities and risks involved. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're halfway through today's show, and I'm excited to dive into our middle segment. Today, we're exploring a fascinating story that highlights the complexities of international trade and its far-reaching impacts on various industries. As you may have heard, the Trump administration has announced plans to impose a 50% import tariff on copper imports, which could have significant effects on the U.S. economy. Copper is an essential material used in everything from consumer electronics and automobiles to construction and the military. The proposed tariffs aim to bolster America's copper supply chain, encompassing mining, refining, processing, recycling, and manufacturing semi-finished goods and end products. Now, here's where it gets interesting. The plans involve including semi-finished products, such as wires, sheets, tubes, and plates, which are crucial for power grids, data centers, and military applications. This move could raise costs across a wide range of industries, from electronics to construction, and even affect the U.S. military supply chain. On one hand, proponents of the tariffs argue that they will help strengthen the U.S. copper industry, reduce reliance on foreign imports, and enhance national security. On the other hand, critics contend that the tariffs could lead to higher prices for consumers, disrupt global supply chains, and potentially harm domestic businesses that rely on imported copper products. To put this into perspective, the U.S. imported over 908,000 metric tons of refined copper in 2024, with a significant portion being used by fabricators to produce semi-finished goods. The Copper Development Association has emphasized the importance of copper semi-products in the U.S. military-industrial supply chain, highlighting the potential risks of disrupting foreign supplies. It's essential to consider the potential consequences of these tariffs on various stakeholders, including American businesses, consumers, and the global economy as a whole. As we continue to monitor this developing story, it's crucial to weigh the potential benefits against the potential drawbacks and consider alternative solutions that could achieve the desired goals without causing undue harm. That's all for this segment of the Riskwiser Zone. We'll be keeping a close eye on this story as it unfolds and exploring its implications in more depth in future episodes. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're wrapping up today's show with a look at the latest developments in the world of commodities and oil production. We've got a few stories to dive into, so let's get started. First off, it seems that OPEC is nearing the end of its supply hikes, according to reports from AIDailyPress Economic and Financial Analysis. This news comes despite oil prices taking a hit yesterday, with ICE Brent settling more than 2.2% lower, below $70 a barrel. However, prices have since recouped some of those losses after President Trump announced plans to make a major statement on Russia. Meanwhile, natural gas futures rallied yesterday, with front-month Henry Hub settling 3.8% higher on the day. This comes after the IEA reported a smaller-than-expected storage increase over the last week. We're also seeing some interesting trends in world oil production. According to Ron Patterson and guests on Seeking Alpha, production from November 2025 to December 2026 appears to be on a plateau at around 84,000 kbd. World oil production, excluding the U.S., is forecast to increase by a total of 793 kbd from March 2025 to December 2026. And in non-OPEC countries, oil production is expected to increase by 559 kbd over the same period. Now, it's worth noting that these trends can be volatile and subject to change. But one thing is clear: the world of commodities and oil production is complex and multifaceted, with many different factors at play. As investors, it's essential to stay informed and up to date on the latest developments in this space. Whether you're looking at OPEC supply hikes, natural gas futures, or world oil production trends, it's crucial to approach these markets with a critical and nuanced perspective. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, invest with caution.